The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the grain markets faded into the weekend on Friday with another active weekend of harvest in front, no doubt, impacting corn and beans, among a multitude of other factors. Wheat markets kind of soft all week long and showed double-digit losses on Friday's board. Mixed day in livestock on Friday as well. Let's talk about things. Joining us for market analysis today, we welcome back Brian Irie from Crossroads Co-op here to Market Talk. Brian, always good to catch up with you, sir. Thanks for joining us. How are you?
I am well, and thanks for having me again, Jesse.
You bet. Well, we were chatting a little bit off air, and I think a good place for us to start, we're near the end of October here, Brian, and largely row crop harvest is nearing the finish line. You look broadly across the board at corn, beans, kind of ending the week under pressure. I have to think maybe some reluctant farmer selling, or, maybe Thursday, for instance, no beans got above 10. I think that maybe drove some sell orders and stops and things like that. But even the wheat market too, kind of weak. Just not a great way to end the week, I guess I would say, on Friday as we near the end of the month, Brian.
It really wasn't, and I did not really anticipate that. We, I think, have kept the markets pretty well inflated, at least the corn market and maybe the soybean market to some degree, inflated on export news here over the course of the last week or 10 days. And we had announcements again this morning, but boy, it did not do much to support futures here to end the week, and it ended up being pretty ugly, as you mentioned.
Well, let's think about this from a few different angles. Let's start with that export business. I mean, 8 days in a row of corn sales, soybean sales showing up again, China showing up on Friday in those soybean sales. And so the export demand has been good, but also I think the end users have been looking for some product in various parts of the Midwest, maybe trying to pry a little bit of that out of farmers' hands as storage is starting to fill up and corn piles are starting to show up across really many areas. I mean, talk about the demand picture, both domestically and foreign here, Brian.
Well, it's very interesting because that's been a hot topic. We meet twice a week with our advisory group, and yesterday that was a big topic of discussion. And I think not only from the domestic end users perspective, Jesse, but the importers perspective. We had these corn futures, down around $4 right after the report. In fact, we dipped down to $3.99 briefly. And it just felt like the end user, whether a foreign end user or a domestic end user, decided this is as cheap as we're going to get. It's time to get some coverage on. And that's what's happened. Just 141.8 million bushels of old crop corn sales last week was that's just unheard of. And there was one big purchase from a milling company in Mexico that made up about half of that, and that has become kind of an annual affair with them. But my gosh, I was running through some numbers this morning. We have averaged 86 million bushels worth of corn sales over the last 4 weeks, which is a 30-year high. There's the 141.8 million bushels this week was the highest September volume in 1 week since 95-96, when we had a really poor crop in 95. And the Chinese came after U.S. corn just at a frantic pace for months on end. But demand has been the story behind the market. And I agree with what you're saying. I think that as we, especially in the Midwest, we're probably not that far along here, that the farmer has become a little bit of a reluctant seller. And you're probably even seeing some elevators that have gone to cash only on corn because they need to find a way to get rid of it.
Well, and thinking about this too, I've been watching spreads and basis and things like that. And it depends on your location, but I think that's been a key to watch as well as we get into options expiration, and first notice day will be next week and things like that. I mean, Give us your perspective out there in the Panhandle of Nebraska, Colorado. Just for instance, I mean, what are things looking like there in terms of basis, et cetera, Brian?
We firmed up 25 to 30 cents this week, and it was just purely on a handful of end users finally deciding to get some coverage on here to finish up this calendar year, as well as the fourth quarter of next year. And what has been kind of the consistent theme is the commercial just hasn't had a lot of ownership, and to get any, you have to go out and push bids to get it. And as a result, we have, we've seen a little bit of corn move out of the producer's hands, especially the farther west you are in this area, in the Nebraska Panhandle or Colorado, where basis tends to be higher because that's where the end users are concentrated. But it popped up. It popped up very, very, very quickly and rather abruptly. So it's still hard to buy corn, I would say. Even at our facilities, we're not getting run over with corn. Prior to the October WASDE and crop production report, when the board was the DEES board was 430 to 435, we did see a little bit of action. But I would say overall purchases are slow out here at this point. The farmer is the big long in the market. They're focused on getting the last 30 to 40% of the corn out of the field and not really excited about selling anything at this juncture.
I want to ask you about the wheat markets too. I mentioned they've kind of been soft here this week. World values, I think, continue to be an issue for the U.S. markets. I mean, what's your perspective on this wheat trade here as we near the end of the month, Brian?
It's been kind of an ongoing problem since harvest. Obviously, the hard red winter wheat areas had a better crop than anticipated. There's a lot of wheat in the country still. That's one of the things that we're fighting out here as a company, is just finding space to put grain, because we still have so much wheat, because the wheat can't even be forced into the cash markets at this point. They're backed up. Rail cars are still a problem with facilities. We move a lot of truck wheat out of our area back into the eastern Nebraska and western Iowa mill market. And it's just like making water run uphill. You just can't find a bid. And I think that has put some pressure on futures as well. And it's very interesting because around the globe and here domestically, there's a lot of areas that need water. The Black Sea region is still very dry. Australia's had its share of dry weather as well as freeze damage. And Black Sea, both Russia and Ukraine, very, very dry. So you kind of have opposing forces there, a potential shortfall in world production versus, front end plugginess here in the U.S., for lack of a better term, that has kind of kept the wheat futures markets maybe going from one extreme to the other. And when they do move, they move in big chunks, and it has been really tough to figure it out. You can easily get friendly deferred wheat, but you come back and look at the front end, and it just is very, very tough to get friendly. The other piece of that is interesting is just the amount of ownership that the farmer still has that remains in bins that has to move probably before harvest gets here.
I should ask too, South American weather, that's becoming an increasing story in these markets. How much of an impact do you think that is having right now across the grain markets, Brian?
I think it's a big deal, especially with corn and soybeans, and maybe more so soybeans than corn. It started to turn wet there about the same time that we had our monthly WASDE and crop production reports, and there was a lot of negativity around the corn market. I firmly believe that was part of the the quick sell-off that we had back here mid-month. I think the question that still remains in my mind with South America is how much corn gets planted down there. Economics are not good. It sounds like the producer down there has bought fewer inputs, including seed corn, for that crop, and a lot of folks are considering cotton. On the Argentinian side, obviously their wheat conditions have improved a lot, and it feels like the soybean crop is going into the ground maybe now at an accelerated pace all over South America. So it's some things to keep an eye on here, but I think undoubtedly it has been pressure on our market here as a whole.
Brian Irie with Crossroads Co-op is our guest analyst here today on Market Talk. Brian, a couple more things before we close out here today. Just in general on the grains, and then we'll talk a little bit on the cattle market. But risk management right now, I know there's no magic answer, there's no silver bullet. But I mean, what's the big one or two things you want producers to just keep in mind in general here as we near the end of the month? Elections are coming up. That could play some volatility here as well, et cetera, et cetera. So what do you want producers to keep in mind with their grain marketing right now?
I think just you have to be opportunistic. We are walking a fine line, especially in our part of the world. I know basis probably isn't quite as strong over in the Eastern Corn Belt as it is out here. But I think being opportunistic, when we get these rallies in futures, it pays to get some sales on the books. You don't have to get crazy. And your best opportunities seem to be in the back months. There's still good carry in the board, although some of that has eroded over time here. We did build it back a little bit today, but I think trying to get some grain sold out in that April, May, June, July timeframe, if your cash needs allow you to do it, makes a lot of sense. Otherwise, I think you have to be very cautious about what you do here. It's hard to get real bullish in light of the big crop that we have. We do need to keep demand coming on the export side, because that is the only place that we're going to create more of it this year is on the exports. We have not seen China around the market yet. I know our advisory service has them on the balance sheet for 100 million bushels of corn out of the U.S. And if they don't come here for corn, it definitely does have an impact on the ending stocks and the balance sheet. So you have to have that in mind here. I think we're sitting a lot better than we could have been. It would not be hard to have imagined corn futures at the 375 level if we hadn't seen the extraordinary demand that we have right now on the export side.
Yeah. And to that point, there's been plenty of unknown destinations on those export sales. So maybe that's China, but then again, it very well might not be. It could be other countries there. So we'll just have to see how this all plays out. I do want to ask you the cattle trade before we close out. I know you're out there in feedlot country, of course, so we can rope in some feed need talk here as well. But cattle, I've been liking the term bearishly optimistic in this cattle trade, and we're talking just ahead of the release of the on-feed numbers, which we'll digest this upcoming week. But I guess, what's your perspective on cattle, a cash trade, et cetera, et cetera? How are things looking in your eyes right now, Brian?
I was a little surprised at the estimates on the marketing at 102.2% of a year ago, which implies 1.7 million head were marketed back here in September. Probably a little bit more beef around the market than maybe I would have anticipated. I think as we move forward here with placements down a bit and on feed down a bit, maybe we can see this cash trade hold together a little bit. Although it does feel like out in our part of the world, and we'll get confirmation of that this afternoon, our numbers are better than they've been out here for quite a while. I don't think anybody is at capacity if they don't have a marketing agreement with a packing plant. Those guys, those yards that do have marketing agreements seem to be carrying better numbers than the ones that don't. But a lot of, I think just a lot of questions out there. Demand, I still think demand is a huge issue on the beef side with the economy and the kind of shape that it's in, Jesse. It's a tough situation, I think, with high beef prices for a lot of families to afford to put a lot of it on the table.
Yeah, I couldn't agree more. I think this fourth quarter is going to be very interesting just to see what, not even necessarily the export demand, but the domestic demand. What does that look like? Holidays, after the elections, et cetera. I think that could be a big key for the beef industry, Brian.
Yeah, I do too. And there is, you had mentioned the elections earlier, and I kind of skipped over that, but it just does really feel like there's so much uncertainty out there in terms of the economy and, where the country's headed after these elections.
Yeah, I couldn't agree more. Well, we are racing towards those elections. Going to be a talking point, no doubt, in our everyday lives and in the markets too. Well, we appreciate the time and the analysis here today. Brian Eyre with Crossroads Co-op. Have a great rest of your day, sir. Thanks for being with us, and we'll talk to you again real soon here on Market Talk.
Sounds good, and thanks again for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.